Hi everybody, this is Lara with your end of the week video for oil for the trading week ending Friday 18th of June 2021. The Elliott Wave count has expected upward movement. It's continuing. The next target remains the same at 76.91 and a longer term target at 87.90. I've expected for a long time now that oil has found a major sustainable low in April 2020. This analysis remains bullish and price continues higher. This analysis sees a big counter-trend movement over here. It's labelled Supercycle 2, subdividing as a double zigzag, and a supercycle degree third wave beginning here may only subdivide as an impulse at cycle degree. It'll be labelled cycle 1, 2, 3, 4, 5. When cycle 1 is complete, cycle 2 should be a big, deep pullback or consolidation to last about a year or so, and it may not move beyond the start of 1 below 10.24. Let's take a look at this at the weekly chart level. The structure of cycle 1 beginning here has primary 1, 2, 3 incomplete, 4, 5 has to continue. Primary 3 may only subdivide as an impulse with intermediate 1, 2, 3 incomplete, and then 4 and 5. Within intermediate 3, no second wave correction may move beyond its start below 57.26. The target for primary 3 expects primary 3 to reach a common Fibonacci ratio 1.618, the length of primary 1, at 87.90. At the daily chart level, let's zoom in on the structure of intermediate 3 within primary 3, a third wave within a third wave from this low here, this point here. Within intermediate 3, minor 1 is a leading contracting diagonal, minor 2 an expanded flat, minor 3 incomplete. The target for minor 3 is for it to reach 1.618, the length of minor 1, at 76.91. When minor 3 is complete, then a pullback or consolidation for minor 4 should last about a couple of weeks and may not move into wave 1 price territory below 66.75. Draw this channel around intermediate 3 using an acceleration channel technique from the end of minor 1 to the last high, and then place a parallel copy on the end of minor 2. Keep redrawing the channel as price continues higher, and when minor 3 is complete, that'll be drawn using Elliott's first technique. And then it may show where minor 4 may find support about the lower edge if it's deep enough or time consuming enough. It may also end about midway within the channel. At the weekly chart level, let's take a look at some classic technical analysis and see how much support or lack thereof is there for the Elliott Wave analysis. These horizontal lines are support and resistance lines, and to draw them I look left on the chart. I zoom out a ways and I draw horizontal lines to fit along as many highs and lows as I can. There was quite a zone of congestion with a lot of resistance and support that oil has just moved through a couple of weeks ago, and now there may be some room for it to increase upward momentum. Last week, upward movement had push from volume. This week, I just checked this chart. This was prepared before Friday's close, but Friday's closed now, and it does have lighter volume this week. Not quite this light, but it is lighter than last week. But overall, it won't necessarily move in a straight, clear line. Overall, there is some support from volume for upward movement. If we see any deeper pullbacks here, and pullbacks along the way are normal to be expected behavior within a bull market, price won't move in a straight line. That's not how it works. If we do see a deeper pullback, look for support initially about 65.65 for a longer term support. ADX is indicating there is an upward trend. It's above both DX lines though, so the trend's extreme, but it's not above 45, so the trend is not very extreme, and this market can reach a very extreme trend and sustain it for quite a while. ATR is flat as price moves sideways and now higher, and I'm learning, because most of the time I've been analysing oil, it was in a bear market and now it's in a bull market, and I'm learning that it may be behaving like the S&P does. When it has downward movement, ATR increases. When it has upward movement, ATR declines or is flat, and that doesn't necessarily mean there's weakness in upward movement. This may be a feature of this market, I'm learning. On balance volume, the last two signals it gave at this time frame, the weekly chart level, were bullish. A break above, the last signal it gave here is bullish. A break above resistance is a bullish signal. It's not a very strong trend line though, so it's not a strong signal, but it supports a bullish analysis. There is still bearish divergence between price and RSI, but I would rather read it between short-term swing highs or lows. And so I'd rather wait to see RSI reach overbought more clearly, dip back below, and then have a short-term divergence, the opposite of what we see here. I think this is just a little bit too long-term for any divergence noted here to be considered as a reliable indication of downward movement about to happen. I didn't expect that for the last couple of weeks, and I'm not going to expect that again this week, and prices continuing higher. So I do note that. I don't think that's the best way to use RSI and divergence. I've learned that one the hard way over several years now. Stochastics is overbought, but this market can obviously sustain that for quite a while. Here stochastics remained overbought, and yes, price continued higher. And the short-term picture at the daily chart level doesn't have Friday's candlestick. It's a green candlestick with a long lower wick, so we've got a couple of bullish long lower wicks there. That supports a bullish analysis for next week at least. If we see a deeper unexpected pullback here, look for support about 68. Wednesday and Thursday volume fell as price fell of its own weight. That's a shorthand way of saying price may have been falling due to a lack of activity from buyers rather than activity from sellers. And price can fall in those situations or in that circumstance quite a long way and quite hard. So a decline in volume as price falls, that on its own doesn't mean that downward movement has to end. ADX is declining, indicating no clear trend at this time frame, but all it needs is for the black ADX line to turn up again, and then it would again give a strong bullish signal. An upward trend would then be indicated in a reasonably early stage at this time frame. Before I expect a bigger pullback or consolidation for oil, I would wait to see ADX reach extreme at both the daily and weekly chart level, and I'd want to see some bearish divergence from between price and RSI, between shorter term swing highs. We don't have, at least on the daily chart, we don't have that here, and this is what I mean. Here we had double bearish divergence between price and RSI, and it was resolved by quite a decent piece of downward movement. That setup is not evident at this time, and so I'll wait to see it before I expect anything bigger maybe about to happen. And MACD full bore bullish. That's my analysis for you this week for oil. I hope all our members are having an awesome weekend.